Here we go. Good morning, everyone. I hope everybody's doing very well. This is Travis with Spoon Carter Cow Trading, Trade with Travis on YouTube. Hopefully, everybody's doing very well on this Wednesday, day before Thanksgiving, day before Thanksgiving session of Trade with Travis. Hopefully, everybody's doing well. I didn't say that 3 times already. Let's go ahead and take a look at the charts and let's see what we have. So, I'm not a CTA, so I'm not going to tell you whether to buy or sell. What I'm going to do is teach you education. From that education, you can be able to make your own informed decision. Understand that Forex involves risk. It involves risk of being able to make money. Also involves risk of being able to lose money. So please keep that in mind. Understand that past performance is not indicative of future results, which means that if you end up making money yesterday, not promise that you'll end up making money today. So with that being said, showing myself onto the screen. Hopefully everybody's doing very well. People out on Facebook, people out on YouTube, hope everybody's doing very well. We will get back onto Instagram going into next week, along with being able to switch over the way that we're doing it and doing a little bit more advertising, trying to jump out a little bit more and get out of my shell. Obviously, if you end up reading what my birthday goals were going into 34, you'll understand what I mean by that. So let's take a look at the charts. I had to talk to my masterclass students a little bit as well, and I'm going to be upset with myself just a little bit based off of the move that just happened. I actually ended up canceling out on one of my EAs and not letting it continue to be able to move. But that's on me. Hopefully, I end up getting a trigger and it kind of makes up for the loss that I just had. But that's one thing on its own. So we'll talk about that in a second. If you're new here, thank you for being able to hop in. Make sure that you end up liking, sharing, subscribing this video to people that you end up people that you think may end up wanting to know how to be able to Forex trade and be able to go into it. What we end up doing here is take a look at all of the Forex US based pairs to start to take a look at some indices and see if we can be able to take a look at some trading opportunities. If there's a trading opportunity, then I'll share it with you. I'll show you my thought process and why we end up taking that trade. And this is for educational purposes only, so you can be able to use this as a way of being able to learn, whether if you do it based off a demo or if you decide to be able to take this trade based off of being able to just do it by yourself. And obviously you can do that as well. So let's go ahead and hop into it and let's get started. First thing we always do, like always, will always be in do our trade mechanics. So here we go. The first thing that I end up seeing is this. Today is Wednesday. We have a lot of news, and this news is going to end up being U.S. based, and it's going to go from 8:30 to 10 o'clock. And then after that, everything is going to end up dying off. Aside from the FOMC meeting minutes, that's going to end up having at 2. So we need to keep our eyes about what's going to end up happening with that. The U.S. dollar has been weak when it came down to the way that the pair has been moving. But overall, when it comes down to news for its indices and everything else like that, there's a lot of optimism on vaccinations and everything else. Every Monday for the last 3 weeks, the market has had a huge move to the downside against pairs like gold and pairs like silver because of optimism on what's happening with vaccination. So please keep that in mind in the way that you're going to end up looking at being able to trade this. My thought process would be take a look at short trades for right now until the market ends up hitting their own D extensions. Once that ends up happening, then switch them over to start looking at buying. But a little bit later on today, we have durable goods that's going to end up happening. We're going to end up having initial jobless claims. Typically, once again, that's a precursor to non-farm payrolls. We got non-defense capital goods. I think that I end up affecting more like the S&P and the US 30 more than anything else. And then after that, we have GDP annualized. We have GDP annualized. We have to pay attention to what that numbers. And then after that, once again, we have FOMC numbers that's going to end up happening a little bit later on today. With that being said, let's go ahead and take a look at what's going on overall with the big three. If you're not familiar with the big three in our mind is the U.S. Dollar index. We end up taking a look at oil, and then after that, we end up taking a look at gold. The reason why we do that is because we want to see what's happening with those overall pairs, and they give us an identifier about what's happening with the overall indexes. So, everyone, give me one quick second. Sorry about that. One quick second. Sorry about that. So what are we looking at? We're seeing that the U.S. dollar index right here at the is at the bottom of this overall move, and we're basically making like a double bottom. And I'm going to show this, and you're going to see this move over and over again because it's been happening between a lot of pairs, and from those pairs basically making that move, it's actually been showing more of a uptick for the overall move of it going from there. Okay, and what do I mean by that? That means that market has hit a bottom, hit another bottom that's basically right beside it, and then after that, the market has basically sparked up to the upside. By sparking up to the upside, you start to see these pairs basically break out this overall area where the market has had that overall break from that resistance, and that resistance level will actually end up being right around here, and then after that, pushing towards the upside. So if that's going to end up being the case, based off of what we've seen, based off of past movers, US 30, NAS 100, XPX 500, all of these different positions, then what we're probably going to end up seeing is this market push up, retest, and then break out. But the biggest thing that we didn't get into was the movement when the market ended up hitting support and then starting to push back up. Because of all this news going out, if you get any type of good news from the US dollar, we're going to start to see a huge push towards the upside. What does this mean? You should see that pairs like U.S. based pairs start to get a little bit stronger. You should see overall that the indices should start to get a little bit weaker based off of that overall move, if that does start to happen. And pairs like gold and everything else like that start to remain to get a little bit weaker when it comes down to that overall movement. So U.S. dollar is at a support level. Does that mean that I'm looking to be able to buy? We have to take a look at it. That's something that we have to really kind of pay attention to. Oil, if you look at it, here's that same move. Market went down, hit the bottom, hit a resistance level, fell down, hit the bottom again, broke out of this level. Since that break, it has not retested yet, but once it starts to retest, and after that, you end up having a counter trend line break that you can be able to go out there and look to be able to buy up to 48.84 for it to move to the upside. Right now, oil is considered to be bullish, and if you think about it, oil is probably bullish because of one common sense reason. We're going into Thanksgiving tomorrow. People are traveling today. There's a higher demand of people. There's a higher demand when it comes down to gasoline. So there's going to end up being a higher demand on overall pricing. There's going to be a raise in pricing. So we need to keep that in mind when it comes down to this movement. Taking a look at gold, what we see is this. Market ended up falling all the way down to the 1800 level. I think it went as low as 1798 for this overall movement to the downside. We're basically at a 2-hour high for this overall move, but the market has not completed a overall daily D extension. The daily D extension to the downside is expected to be down at 1730. Expected to be at 1731. Do I expect that it's going to go all the way down to that level? Not necessarily, at least not right now, but I do expect that it will probably end up having a drop. Right now, the market is in an R3 position. If you know what that means, or if you don't know what that means, then that means that you need to hop inside of our masterclass. But pretty much what we're going to end up seeing is one-sided trading. And from that one-sided trading, I believe that the market is going to end up falling down to the downside, at least down to that 1731 level. And then after that, that's when I would start looking at being able to buy overall myself. But I do believe that we're still in a bearish type of movement, and we're probably going to end up seeing bearish movement overall until the market actually ends up breaking that level and moving forward and going from there. So that's where we're at with that. So let's break this down real quick. U.S. dollar index is basically at a support. We're starting to see that we may end up having a little bit more bullish movement. We'll look at oil. Oil's already done broke out. We're seeing a lot of bullish movement. That means that the Canadian dollar should be strong. And we look at what's happening with gold. We see that gold is falling, which means that the Japanese yen should be falling and the Australian dollar should be falling with it when it comes down to overall pairs. So you look at the crossovers, we should see that the U.S. yen at this particular point should be bullish. When we look at the U.S. Canadian dollar at this point should be overall bearish, but it should start to be a little bit more stagnant. If you take a look at what's happening with the Canadian yen, you should see that the Canadian yen should be bullish, right? And let's do that vice versa when it comes down to all of those. So with that being said, let's go ahead and take a look at those pairs and let's see if we're right based off of what I just talked about. US yen will actually end up being the first pair that we'll look at, and then after that, we'll take a look at open pairs as well. So US yen, what are we looking for? We're looking for a bullish movement. Well, we got that bullish movement yesterday or 2 days ago. This market ended up hitting or was in a triangle. It broke out of that triangle towards the upside. Never retested, but it broke out of that triangle towards the upside. It probably retested off of the 2 hour. Let me rephrase that statement. So we had this triangle. We had this huge breakout of an overall move, in which, once again, that's expected based off of what we just talked about. That movement ended up being over 80 pips. Since then, the market has been a little bit more stagnant. Currently, the market right now is in the buy zone. If I'm a scalper, if I'm looking at being able to get something this morning, there goes your counter trend line break bullish. I will look to be able to buy up. I will look to be able to buy up to at least 105 if I'm looking at doing anything. Do I think it'll push all the way up to the newest level or break 105.50? No. But if I'm a scalper and I'm just saying, hey, I want to just get into something in the market and this may end up being a good move, that movement will end up being the 105. Currently, right now, it'll be about 60 pips away. If I'm placing my stop would be just below this overall swing low, but this market has to hold. That swing low will be about 30 pips away. So we're talking about 30 for 60. I would take that trade if I'm looking at being able to scalp. Unfortunately, I'm just not one of those people when it comes down to doing it from a manual standpoint. I'm more of a swing trader, so I'm staying out of it for right now. But that is a scalpable position to be able to get into. Okay, we said that was supposed to be going up, and that is exactly what happened. We said that U.S. CAD was supposed to go down. Well, this is what we're looking at on this overall move. Market has hit support on the U.S. Canadian dollar. So the market has failed down to overall support. Currently, right now, the daily is in a no trade zone. But that really doesn't matter if the market is in consolidation. Now, if oil remains to be going up, or if it's not going to retest, then we should see that the Canadian dollar should continue to move to the downside. What I believe is that because the dollar is at a support level, and if we end up getting any type of good news for the dollar going into today, you probably should see a bounce to the upside. Meaning that with this market being at support, this will probably be the only position that will make sense to be able to look to buy if you're looking to be able to buy up to back to 134. At this particular case, looking at the U.S. dollar index as a whole, I believe that the market is going to be short-term bullish, but I'm not willing to bank on the market basically bouncing up on this overall position. I'm going to stay out of it for right now because I believe that the market is still bearish, and I think the market will go eventually to 126.80. So I'm actually looking for high prices instead of low prices on being able to get in on this particular pair. Okay, so I'm out when it comes down to that overall pair, but that's what we see for that movement. Okay. Moving forward, let's take a look at let's go quickly through the other pairs. U.S. Euro United States dollar. What has happened? Market has hit and broke. Well, it ended up breaking past 1.19 and then rejected again. So what are we looking for? This market's going to end up rejecting that hard, and we're expecting bearish movement. And then we should see that the U.S. dollar should start to regain strength and start to push the market back down to at least 1.17 before actually moving. If you're looking at being able to short the market, that would be the position to be able to short the market if you're trying to do that. But once again, right now, market is still in consolidation. I'm still out on this pair. Same deal with U.S. Swiss franc. U.S. Swiss franc is still basically in the middle of this overall market for its consolidation. There's really no movement. There's really no momentum. When there's no momentum, then there's no movement. If there's no movement, then there's no trade. So I'm out of this overall market as well. Australian dollar, United States dollar, we end up talking about we wanted to see a counter trend line break to the upside. We actually end up getting that counter trend line break to the upside actually yesterday. And didn't take advantage of the opportunity, at least not from a manual standpoint. From a actual trading standpoint, I believe that actually didn't take any trade on that one either. Go figure. So missed out on this overall position, but this allows me to be able to know that I can be able to turn on my EAs for this position. So that's exactly what I'm getting ready to do. Let's see what we have on the 2 hour. 2 hour, we should be getting close to the buy zone. Okay, so all right, so I'm glad I looked at that. I've had my EAs off on this one for a while now, just because the market was not in a position to be able to trade it, at least not for my liking at that particular position. Now it is, so we're good to go on being able to trade this overall position as a whole. So turning this one on, and we'll see how that goes for the Australian dollar in general. Hey, you're in your underwear. Go upstairs. Good morning. Good morning. We'll see how this pair kind of reacts for this overall movement, and being able to go from there. And taking a look at that. Okay. Let's take a look at the pounds. Pounds right now is basically hit a D extension. The market has hit a daily D extension, so we're going to see that this market will start to have a little bit of a retracement. I'm not looking to be able to sell the market based off of that overall news. I just know that there's a retracement, so we're going from there. So once again, all of these are showing signs that the U.S. dollar should start to get a little bit stronger. U.S. CAD, it should start to get a little bit stronger because of that support. I don't know how long that how long that actually is going to end up being for its overall strength, but we just know that it probably will be because of where it is in the support level. U.S. yen, they actually ended up making a move yesterday. Euro, United States dollar, we see that the market actually ended up hitting resistance, and if the market is going to remain to be in consolidation, then we're going to start to see more people starting to sell. We're looking at Australian dollar, United States dollar. We're looking at the market basically retesting the overall top of resistance. So we should see that there could be more buyers actually popping into this overall market as long as this market actually holds and U.S. Swiss franc is not there yet. Okay, let's take a look at our open pairs. Our open pairs that we have right now is the New Zealand dollar, United States dollar for was a buy, and the New Zealand dollar, Japanese yen for was a buy. And we'll go through and take a look at both of those pairs. First one that we're going to pay attention to because it showed up on the screen first was New Zealand dollar, Japanese yen. What we ended up doing was that we actually ended up taking a buy once this market ended up breaking this counter trend line break. We missed out on the first move, so we caught it on. We actually caught it on the counter trend line break again on a 2-hour move. This market has made a sentiment change from this overall move. And from that sentiment change, we end up getting that huge push to the upside. The market is expected to be able to go up to 2 different levels. The first one is expected to go up to 76. The first one from a daily position is expected to go up to 74.69. That is our, let's see, it's not a D extension. That's not our move that we're looking for. Where is it? We're expecting to be able to get out at 76.95. We have a subfield that's expected to get at 74. I'm guessing that's based off a 2-hour, not based off a weekly. Where did that number come from? Okay, let's do this over again. Weekly smart field is down here. Okay, that makes sense. The weekly is expected to be out at 76.72. Okay, where am I getting 75 then? Okay, so A, B, C. Okay, there was our C. Go to the daily. Our C should be right here. Oh, okay, so that fib is wrong. Let's see. There we go. That will make it 75.20. Okay, so we're still off when it comes down to the fibs. We're going to readjust our take profit numbers. If we're doing this based off of the weekly, then the weekly end up being at 76.25. If we're doing this based off of the daily, that would be more of a take profit too. If you're looking to be able to get out, that will end up being right around 75.20. Either way, the New Zealand dollar is expected to be bullish. I'm going to make a note to be able to take a look at. I'm going to make a note to take a look at this overall area as well. So I'm going to highlight that for myself to know that if this market ends up rejecting off of this 75 number and then after that does not push up a little bit higher, then that's the area to be able to get out at. So instead of it being red, to me, that's going to end up being alert color. That alert color is typically right around that blue range. Okay, so that's the number that we're looking at for us being able to get out if it does continue to push the way that it's doing. Okay, can we get in? Can you get in today? I actually ended up sending out a signal to my students yesterday that signal was based off of this overall break to the upside. We're currently inside of that break right now with the market being in a buy zone. If you're interested in being able to buy, this is a active buy right now that you can be able to get into. This market has been in a little bit of consolidation for this overall movement. I think that's solely because of what today is and everything else like that. If you're looking at this and you're saying that you're looking at consolidation, then I can understand why you wouldn't buy. I'm looking at this based off of this counter trend line break that ended up happening. It broke to the upside, it rejected, but it held support, and right now it's breaking out of this position again. I would look at taking this as an active buy right now as we speak. If you're looking at being able to sell again, your stop loss will end up being at 72.27. 72.27 is the original position that we end up getting into the first time that we end up taking this trade towards the upside. So you'll be on a second trade. Your risk percentage would need to be lower if you're looking at being able to get in on this overall trade. Once again, two positions that you can look at being able to get out. One would end up being the 75 range, which would be about, which would end up being that 75-20 range that we just looked at from a daily perspective, which will be, okay, now I'm getting 76.96. Okay. Yeah, from a daily perspective, it end up being 76.96, or you can look at 75, which would be a sub fib for its overall movement if that does happen as well. All right, so that's where we're at when it comes down to this overall position. Currently right now, if we're looking at it, we're up 63 pips on one, down 4 on the second one. But once again, this is a swing trade. This is a long-term position, being able to go from there. Let's take a look at the indices real quick. And I'm going to start with the one that I'm kicking myself on right now, because I actually end up getting out of the overall trade, and it's starting to push in a manner that if I would have never got rid of it, then I would have never lost $300 this morning. Jeez. So US dollar index. And once again, let's talk about this move that we've been talking about overall. On a daily, just like with the US dollar index, market fell, hit the bottom, went back down, hit the bottom again, made a double bottom or a W pattern or whatever you want to call it, went up, broke a counter trend line. We bought right here in this area on Monday. The market has started to push up. We have made 2 wins on this overall trade towards the upside. Very excited about that. Before we end up moving on, the market is in a sentiment change area, and we're starting to see momentum starting to push up. Now, where's the market expected to go? The market is expected to go to 3760. 3760 is basically the daily D extension for its overall movement in the overall push zone area, where I think the market is going to end up going eventually. So with that being said, if we get a counter trend line break on the 2-hour, or in your case on the 1-hour, depending on the way that you end up looking at this, if you get a break on that overall move to the overall upside, then you should start really kind of pay attention to it being able to take in a buy towards this overall movement. Let's take a look at this based off of the 1-hour. We look at it on the 1-hour, the market is in the buy zone, meaning that we should look at being able to buy all the way up once this market actually ends up breaking, and then after that start to push up. But it has to be above the overall trend line first to be able to take that move and be comfortable with being able to trade it towards the upside. Once you end up getting that, I will place my stop below the overall 5-day moving average. 50-day moving average, and I would definitely end up placing it probably somewhere in the middle, or if not below the 200-day moving average. And that would be something that you could be able to use as a way of being able to protect yourself long term, so you can allow this market to be able to move all the way up to this overall daily D extension. This movement from here will be about 50 pips, about 50 points, if you end up taking this move right now at this particular position. And let's kind of give you an example of what that looks like. We're saying that's 50 points for its overall movement. Kind of pulling the curtain back and showing you my FMA. Australian dollar starting to roll, kind of like what we expected. Market just basically bounced off of that overall area. It's really starting to make a push to the upside. Let's see. So we're talking about the S&P 500. S&P 500, we're looking at a 50-point stop. I'm going to say, yeah, 50-point stop. If we're looking at the overall movement, let's say you had $5,000 in your account, just hypothetically. We're doing it based off of 1%. Then that means that you can go with 8 micro lots for the overall position for the market going up, meaning that you're going to end up risking about, in this case, $250 for your overall account. Now, what does that mean for us take profit? Well, we said that the market would end up going to 37.60 for the overall move, for the overall push zone area, or the daily push zone area would end up being at 37.60 for its overall movement towards the upside. If that remains to be true for this market going towards the upside, then you're talking about another 100 and at this point you're talking about another 121 points. All right, so it's a little bit more than a 1 to 2, which is a good thing. And also that means that if it hits off of this position, then you're talking about every bit almost $1,000 for its overall movement to the upside. Now, this is what we know. The weekly and the daily is up. We had a counter trend line break that ended up happening. The market has not broke the stochastic for its being in the buy zone yet. But the market set a daily R2 zone for us being able to push. So we have an 89% chance of this market basically end up hitting our overall position from where we are at this particular point. The only thing that we have to do from this overall movement is to remain patient and allow the market to be able to prove to us that it's ready to go. The market is clearly in a buy zone. That's one thing that we clearly do know. But going into this overall hour, it has to be able to break above. Once it breaks above and it holds, then that's a trade to be able to take. And once again, I'll place my stop loss in this case. Like we said, 50 points away. My stop loss would end up being right around, let's see, that was based off of the 2 hour. Hold on, everybody, to make sure I end up saying this right, because once again, that's the most important part. I will place my stop right around the 35.80 area. If you want to be a little bit more cautious, I will place it right around the 35.65 area. That'll be about 60 pips if that does happen, for being able to make that move. But I think that'll be enough position to at least allow the market to be able to make its move to the downside, and then after that, be able to prove itself from there. I'll make sure I'm saying this right, because okay, that makes sense. Okay, right here, I would still place my stop below 35.80. My stop would be right around 35.80 for the overall move. That would be about 55 pips from this overall point. Let me make sure I write that down for everyone. Let's see, stop. $35.80. Take profit will end up being $37.60 for that overall move. You're looking at being able to get in based off of a counter trend line break entry. Now, because today is probably going to end up being slow. Because today is probably going to end up being the last day before the market actually ends up moving and closing out and everything goes like that. I would look at this as a pair that if you're going to take the trade, understand if you do take the trade, this is a get in, get out. Thursday, the market will be closed. Friday, you probably won't see any market movement or anything else like that, but it is a pair to be able to take. All right. Let's take a look at that. Same deal. Let's take a look at the NAS 100. NAS 100 has that same type of move. Now, obviously, Depending on your account size, you may not be able to spread yourself thin on all of these, but this is something to be able to take a look at as well. Market on a daily, double bottom, hit the bottom right here, hit the bottom again. Market ended up breaking out of this overall position. Broke out of this overall triangle, has not retested yet, but we end up having a strong move to the upside. What I would end up paying attention to at this particular point, because this market is above this overall trend line, is because the market is above this overall resistance line, is will this market break out? And if it does, it's going to end up breaking out to 13,098. If it breaks past 13,098, then there's really no area where the market will end up being pushed back, will have any resistance. All right. And I'm saying that to say this: if you get into it early right here, then I will almost ride it up to the daily D extension and just go from there. The daily D extension is expected to be up at 16,000. Right now, that's 300 pips away. We're talking about this first move from here to here. I think that is very doable for the next couple of days. That's about 980 points. That's not the issue. What I'm saying is this: if you look to the left and it breaks this overall high of this overall movement, there's no more positions up here, right? There's nothing from a monthly standpoint, from a daily standpoint. This market will end up hitting highs that it's never hit before, and it will kind of end up doing the same thing that happened with Bitcoin. If it does push up to that level, then you will start to see that people will just look at being able to get in just to be able to get in, and the market will keep on pushing to new highs. If the market keeps on pushing to new highs, then quite frankly, now you have a overall, you have something that you can be able to sit and stay on while this market is actually moving up. Okay, so that's what we have right there. That's what we're looking at. Very important level. It has to break past 12,420 before that actually happens. If that does happen, then after that, you're good. But this will be the second pair that I would look at for being able to get in. Wouldn't be the first one. If it breaks a counter trend line break and it does give you an overall pair to be able to take, then look at it and then possibly be able to go from there. S&P 500. S&P 500, same move. Market ended up breaking out of this overall position. We have a double bottom. Market hit the bottom, hit right here, hit the bottom again, push back up, broke a counter trend line, started to push up. The market is expected to go down to 3760. Did I just do this one? Hold on. Which one was I looking at earlier? Oh, okay. So both of them was the S&P. Oh, go figure. Okay. Okay. That makes sense. Let's take a look at the US 30 then. I'm sorry. I had US 30 up. And while I'm saying this, tomorrow and Friday, we will not have, we're going into the rest of this week, we will not have a Trade with Travis session. So I'm doing this to make sure that everyone can be prepared. Obviously, we're doing a little bit more of an overextended type of session, and that's for a reason. Obviously, I want everybody to be prepared as much as they possibly can going into the weekend. First off, I'm very thankful for everyone that basically watches these and send messages and do everything else like that, and the group that we have right now. So I want to make sure that you're in the best position as possible to be able to make any type of movement that may end up being there. Okay, so we have a sediment change to the upside. The market is expected to go up to 30,479. 30,479 would be the short D extension. The long-term D extension is expected to be at 33,142. For right now, going into the weekend, I will look at 30,479 as your overall take profit position on US 30. What I would be looking for more than anything else is that, do we have a counter trend line break? If we have a counter trend line break to the upside, if we have a counter trend line break towards the upside, then I would look at being able to take this trade towards the upside. With our EAs, we actually end up having it to where it basically ends up hitting and making that movement to the upside for us, and being able to get what we can based off of this movement, and being able to go from there. Once again, what I will look for is once that break actually happens, then I will look at being able to buy. Our stop loss will actually end up being the same position, or it'll be basically below the actual swing low of this overall movement if you're trading this manually. For this one, the point wise, that will end up being, I will place it below the actual point of control. That will end up being right around 327 points. Let's see, 327 points. We're talking about that. We go to US 30. We go 327 points. That means that you can go with one mini lot. The reward from this position, as we look at it right now, oh, that's 30 US 30. Be about 454 points. Not the greatest risk reward, I will say that. You have an 80% chance. Your risk from here will be 270. Your reward will be basically 496, or basically 500 if you decided to be able to take that position for being able to go from there. So if I'm placing my stop anywhere based off of this position, my stop will end up being right around 27,710 right now as it stands. Obviously, if it keeps on going down and keeps on rejecting, you wait until the market actually ends up breaking the counter trend line break to get in and go from there. Stop 27. Let's see, 27, 9, 10. Take profit. We end up being 30,479. Entry 1 hour counter trend line break. There we have it. And that's it for today. So we have a few things that we can be able to look at. Hold on, to make sure that that's right. Make sure that the last number is right. US 30. Okay, 29,710. Sorry about that. 29,710. Okay. There we go. And that's what we're gonna end up trading. That's how we're gonna end up trading. Look for those to happen. If you get those and the market actually ends up agreeing with you, hopefully ends up helping you out very well when it comes down to those trading pairs. And we'll see how the market basically moves. I believe that the market's going to be slow overall, or at least today. The market will move pretty quickly at the beginning portions of the day. I don't think that it will remain to be as fast going into the latter portions of the day. I think that the move that ended up happening yesterday was the strongest move that was going to end up happening this week. Thursday, I believe that the markets are closed, so you're not going to see anything. Friday, you're probably not going to see that much of trading. So your trading today will end up being basically your trading for the weekend, unless you plan on staying this trade until the weekend and looking for a Sunday to Monday type of movement. If you plan on swing trading this, then obviously you have your stop loss and you just got to trust it. But also understand that the market could fall from there. So if you get something, protect yourself. If you don't get that much and the market doesn't give you the signal, then don't get in and be able to go from there. And I say that to anybody when it comes down to this overall trading. But that's where we are when it comes down to this overall pair. If you like what we end up doing, please make sure that you like the Carter Cow Capital business page. Please make sure that you subscribe to Trade with Travis. And like always, plan your trade your plan. Good luck to each and every one of y'all. Have a very happy Thanksgiving. I got to start putting up a Christmas tree.